Good afternoon. My name is Benoist. I'm a technology research specialist working for Natixis in London. It is my pleasure to introduce this new session today on the macroeconomics of AI from the beautiful BPC studio here in Paris. It's fair to say that since ChatGPT has been introduced on the commercial scene over 2 years ago, the general enthusiasm for AI and its generative applications has been quite high. If we haven't yet reached promise of an artificial general intelligence capable of surpassing every human being at any task, the technology is already impressive enough to arouse wildest dreams and, in some cases, the most unrealistic fantasies. To be perfectly honest, AI may not immediately save us from climate change or save us from the threat of cancer, nor will it immediately give us the keys to quantum computing or nuclear fusion. We probably have to wait a little bit before receiving those neural links to increase our biological and cerebral capabilities. But the direction is clear, and while this train is leaving the platform, no one wants to be left behind. AI, which for the purpose of this conversation will refer to computer systems capable of performing tasks normally requiring human intelligence, including automation, machine learning, deep learning, or any form of generative framework, has become a strategic asset of the highest importance, both from a geopolitical and economic perspective, with more than $110 billion of private equity transaction in 2024 in the sector, and hundreds of billions more expected to be spent this year by the big tech giants on their digital infrastructure. There is clearly no going back. From the boardrooms of the Fortune's 500s to the offices of the smallest startup, everyone is wondering how to make the most of these new fancy tools. Now, slowly but surely, maybe we can show the first slide here. Corporate adoption is growing. In the EU, for instance, 75% of the firms surveyed by the ECB in a recent report claim to be using AI in their daily business operations, whether to engage with new customers, improve access to information, produce new content, or develop software code. Now, if the share of employees regularly using AI is still small, penetration is widespread and the trend is unlikely to revert, leading many experts to predict sustained productivity gains and growth for the next 10 years. Now, we will, of course, discuss the extent of such economic expansion and address the shape and magnitude of this trajectory. We'll also be looking into the costs of these developments, particularly in terms of labor. Indeed, this work is gradually transformed, sometimes beyond recognition. Fears of displacement or permanent job destruction are starting to take hold of employees. The ECB survey, for instance, reveals that whilst the majority of people still have a positive perception of AI, there is still about 20-25% of respondents that have a negative opinion, and this remains surprisingly consistent across a very wide range of activities sectors. We will see that historically, technology has never been a job killer despite a strong ability to disrupt. This time, however, things do seem a little different somehow. Which jobs are most threatened by the predicted wave of new AI agents capable of reasoning and acting autonomously 24 hours a day? Are we moving towards a fairer economy, or are we simply introducing new and even deeper inequalities into the system? Now, to help us see through all of this, we're very happy today to welcome Antonin Bergeaud at the table. Antonin, you are an associate professor of economics at HEC Paris, a recognized specialist in economic growth and innovation. Your work focuses on the determinants of long-term growth trends and productivity dynamics. In particular, you've been analyzing the effects of technological change and AI on inequality and the future of work. Your papers have been featured in prestigious publications such as the American Economic Review and the American Economic Journal. And you have been nominated in 2024 for the prize of Best Young Economist in France by Le Cercle des Économistes. We also have Hadrien Camatte here, another young economist, and at Natixis, certainly one of the very best for anything relating to Eurozone, France, and Belgium. And finally, it would be rude, of course, to mention age when introducing a lady. Please welcome the excellent Micaella Feldstein, a technology research specialist at Natixis. Micaella, you have worked extensively in recent months on the transformation of work and the impact of AI in the workplace. Ladies and gentlemen, please remember that you are free to ask any question on the sidebar of your screen, and we shall try to answer as many of them as possible before the end of this session. Right. So perhaps to begin this conversation, we could take like a mile-high view of the topic and give the audience perhaps a little bit of an historical perspective on technology and macroeconomics. Historically, general-purpose technologies such as the steam engine, electricity, or even the ICT revolution, if we're looking closer to us, have affected world economies in quite a profound way by notably generating sustained productivity gains over a long period of time. But if you actually look into the finer details of this, the situation, I guess, is not so quite clear. And in particular, there can be long delays before the first, emerging effects of, in terms of productivity and growth. And I always like to quote American economist Robert Solow here, who said famously in 1987, you can see the computer age everywhere but in the productivity statistics. So perhaps, Antonin, let's start with you. How should we really think about the relationship between technological change and macroeconomics?
Thank you, Eric. So I think it's you're completely right to stress that in history there's been several industrial revolutions, and usually you can associate one iconic technology like electricity, like as a fuel for a bunch of different products that have been introduced throughout the 20th century. And this has been statistically linked to an increase in productivity, which had some impact on standard of living, on the increase of life expectation, and so on and so forth. So those are, those technology had a tremendous effect on the economy and then on the society more broadly. If you look at the very long run, clearly, if you look at GDP growth, you would see the first industrial revolution. There is an increase in our standard of living. You can clearly see the second revolution too. You cannot really see the third revolution. So the ICT, information and communication technologies, and then the internet and digital technologies didn't seem to have generated a lot of economic growth. This is also why we think that we are living in a world where growth is going to be slow for a prolonged period of time. And actually, one of the reasons is that if you look a little bit on the long run, you would see that it takes a lot of time for those technologies to generate effect. You mentioned electricity. The first the discovery of electricity as a means of production of energy is, starts in the mid-19th century. And then it took a lot of time to understand how it works, but also it took a lot of time to just make electricity being part of our process and our society more globally. And if you look at the first effect of electricity on growth, it started only in the US in 1930. Okay, so it took about 70 years to have effect. So now, of course, we think that things are going a bit faster. But if we move forward and think about digital technologies and AI, it will take a lot of time for us to adopt fully those into our process, to learn exactly how to work with AI, how to work with, even with digital technology that we use for years. It still takes a lot of time to understand exactly how to use them properly, and to fully digitize all the processes that should be digitized and understand those that we should continue to do manually. So that's basically why it's hard to associate an economic effect to a technology. But because we have so many studies that have looked at the past, we have some ideas of what could happen with AI, and I think we're going to talk about it, especially in the labor market.
But, you were mentioning the internet. The internet's been around. We were discussing that earlier today together, but it's been around for what, 30 years? And still, why is, you could argue that it is some kind of general purpose technology as well, because it's so widespread. Why is it then that, I don't know, maybe Hadrien, you want to give us some insight here, but why is it then that productivity is really stagnating in so many countries or even declining in some cases.
Yes, you're right, and you already mentioned it in your introduction, and Anton also, regarding the solo paradox, that we can see computers everywhere, but not in productivity statistics. So how do we explain this paradox? I think that there are several hypotheses. The first one is that there is a measurement problem. So the thermometer is not accurate enough because it cannot measure the new symptom, because it is something new and it's hard to measure. The second hypothesis suggests that the expected gains from technological progress and the cost incurred to access it largely cancel each other. I think there is also another explanation, and I think this is the most convincing explanation on my side, is that there are some delays in implementation before we can fully feel the effect of productivity gains. That's what you said, Antonin, in your introductory statement. And for sure, I think that a delay can be very, very, very long to implement such progress. So I think these explanations, and especially the last one, explain why today, even if we see some boost in investment in AI, that it has not boosted GDP yet, or at least only to a small margin.
And don't you guys think that perhaps those technologies are actually introducing as well, like new functions, like I'm thinking about compliance and control function that are actually maybe not productive per se, but might actually weigh on those productivity gains in the long term? These things were not there before the introduction of the technologies. Do you think that has an impact as well? Or?
Of course, it has an impact, but it's definitely hard to measure right now, and even for economists. And when you have something new, you need some time to understand the process, to be able to measure it. So of course, there will be a lot of applications. But as Antonin mentioned, for electricity, we need to master the tool. And at this stage, even when you are using AI, I think you are maybe using AI at, let's say, 0.1% of its capacity. So we have to learn how to use AI. So AI is not only a word, but that's definitely something that we have to learn and to use before understanding the full effect of this technology.
All right, so this brings us naturally to the topic of the day, which is artificial intelligence and its expected economic impact in the years to come. And I think before digging into some of the numbers here, it could be interesting maybe to turn to you, Micaella, for the next few minutes and explore really what has been the impact of AI on the workplace. You have worked recently quite extensively on the topic. What were your main findings in that space?
Yes, thank you, Eric. So the workplace has been greatly affected by digital technology over the last decade. You talk about internet. So internet changed the way we communicate. It simplified access to information. And we had the sanitary crisis, democratized remote working, video conference, and collaborative tools. While artificial intelligence is not new in companies, with many use cases already deployed in many companies in different sectors. We talked last time about the use case, for instance, in banking and insurance, fraud detection, for instance. So the arrival of generative AI is new because generative AI is easy to use and doesn't require coding skills. So it changed again the game in companies. So we wanted in the report first to provide a brief overview of the macroeconomic impact of AI and generative AI, especially on employment. So we see that we had some economies that are very alarmist and are expecting a lot of job destruction and they fear massive unemployment. Like other ones are more measured and they rather see a transformation of jobs rather than the destruction. In the report, we also wanted to see how AI is perceived in the workplace by employees, because that's the first concern, they will use it. So we look into different surveys, a survey which is one more focused in France with the Labor IA survey, and another one which is more international. This is a work trend annual index realized by Microsoft and LinkedIn. So this survey shows us that employees already use AI, and they are aware and happy with the benefits of AI. They use it because it reduces the risk of error. It helps them save time. They can be more creative thanks to AI. And finally, they think that they are more efficient thanks to AI. The recognition of the benefits of AI, however, doesn't hide some question about the future. So employees are worrying about, they're wondering about the usefulness, the meaning of their work. They also express concern about losing their expertise. And they also fear of becoming too dependent on AI. And they are also worried about their employability in the next few years. So we see that employees want more training from their companies. And also they want clear guidelines on the deployment of AI from their organization. So this survey shows us how important is the human factor in the adoption of a technology. So in the last part of my report, I focus on the role of human resources. But I guess we'll come back later to this issue.
Talk about that a bit more. Now, there's one thing in your report that I find even more worrying when it goes to talking about AI development is the recent deployment of things called AI agents. Now, these little agents, like in the Matrix, it's like quite scary, are capable of reasoning. They are capable of acting autonomously. That takes automation to a whole new level. That takes automation to something that would potentially be much more problematic from a labor perspective, I guess, in the workplace. Now, what's your take on this?
Yeah, of course, Eric. Because AI, as I said, is already used in companies with many use cases. But AI has so far been essentially used to automate simple and repetitive tasks like classification, trend detection, or anomalies detection. So now with the advance in the artificial intelligence language model, we have this new so-called advanced AI agents that are capable of reasoning. They can learn from the previous requests they had. They can adapt to their environment. They can interact with other AI agents, and they can interact with tools from the companies. And so they can act autonomously. So these AI agents are capable of performing complex tasks that we thought previously were not automatable due to their high reliance on human reasoning and human creativity. So as a result, skilled jobs, creative jobs are now at risk, or at the very least, they will be impacted by artificial intelligence. They will be transformed. So again, we have two opposite views. We have some experts that think that even skilled jobs will disappear, and others that are more optimistic, and they think that job will be transformed. That, for instance, that AI, by taking over the less interesting part of the job, will finally make the job more exciting.
Right. So, Antonin, you've done actually quite a lot of work on the impact of AI and the future of work as well. And more specifically, you've come up with a detailed analysis of the jobs that are most likely to be impacted. And perhaps we can show on screen a slide that you produced on the topic. So what is your take on this? What are the jobs that are going to suffer the most and those are going to benefit, if I may say?
Okay, so so even though there is a slide that seems to suggest that we have a good answer to this question, it's a complicated question. But fortunately, we have some experience in treating this question because this is not a new question. As you said before, it's been around since centuries, maybe, thinking about, even in the 19th century, people thought that the new textile machine are going to replace all workers and there is no more need for any type of human labor. And then in the 20s and 30s again, and then when internet started again. So we have some background to study this question, and I think it was essentially there was some conceptual progress that were made recently when we, as economists, thought about the effect of robotization on industrial jobs. So initially, in the early 2000s, people thought that one way to know whether occupations are going to be impacted by technology simply requires to look at the description of this job, compare it to what technology can do, and then just assign a number between 0 and 1. 1 would be, I'm very much likely to be impacted because I do pretty much exactly the same thing as what a computer or a robot is not doing. And 0 means, I'm completely, technology is irrelevant for me. So people did that at that time, and they came up with very, very scary prediction that essentially two-thirds of the human labor is going to disappear on a very short run, because robots can pretty much do everything. And since then, we made some conceptual progress, and we started to understand that there are actually several margins that make this question a bit more complicated than that. And this is what I try to summarize in this graph, but let me just drive you through it quickly. So the first margin is, indeed, there are jobs that are completely relevant to even AI. There's less and less because AI is becoming very prevalent, but still, there are, you can see, for example, roofer or household help. Those are tasks where you think that AI could maybe help a little bit, but not that much. Or, that would really require us to think about a science fiction movie where AI would be essentially humanoid robots that can do everything. But, realistically, we think that there are some jobs, especially manual jobs, that are not going to be impacted. Then there are jobs, and actually there's a lot of them among executive and high-skilled professions, that, indeed, if you look at what they do, they produce reports, they produce analysis, they produce things that generative AI can do quite easily. There's also all those artistic occupations that, since two or 3 years ago are facing a huge competition from those AI. But then, so the first margin is say, okay, but people don't just do one thing in a day. So you can look at exactly what the typical day of someone in a given job consists of. And if you do it, you look at different tasks. And you look at the description of each task, and you can realize that some tasks are indeed going to be completely impacted by AI, in particular generative AI, typically producing summary of reports, translating short chunk of text. Those are things that we don't really see why a human will continue to do it. Essentially, an AI do it perfectly. There is not a lot of value added in doing this. These are just direct application of things that are perfectly codified. So AI can do it perfectly. But then the question is, how much of my day those tasks account for? If it's 70%, 80%, then the job is in trouble. If it's 20%, then there is another margin at play, which is, then let's look at the remaining 80%. Are there tasks where there is a lot of value added? Are there tasks that the firm considers to be extremely important? Are they creative tasks? Are they tasks that the worker likes to do, as opposed to tasks that are a bit repetitive, that that take time but are not super important for you? And when you try to look task by task, there are data sets that describe tasks, and there's 20 or 30,000 different tasks, and we can look at each of them and try to assign different scores based on those margins. Then you realize that there's not that many jobs that are completely impacted and at risk of being replaced, because those jobs will be characterized by a large share of tasks where AI is without doubt better than human at doing those tasks. And the remaining tasks that are not considered to be super valuable by the firm. And that's basically why what I try to capture by this AI exposure index that you see as a y-axis here. So the closer you are to 1, the more exposed you are based on what I just described. Then there is a second margin. There is that sometimes we forgot to account for, is that there is a cost, a monetary cost, or an economic cost in adopting those AI. So even though the technology may exist, they still, they can still very much be the case that it's super costly to adopt it. And at the end of the day, it will be so costly that, even though a human may be a little less performing than an AI, you may still want to continue to pay someone to do the task. And if you think at a photographer, you still need some photographs to take picture of live events, to have a sense of what is a good picture, and maybe half of the task of a photographer is going to disappear, but you will still need probably to hire some photographer for specific events. So when you measure this difficulty to automate a job, that's the x-axis, you have a summary of the world labor market, which is here, and basically the tasks that are the jobs that are the more high at risk. Those are the jobs that are at the top left of the graph.
So you're saying accountants are in trouble.
Well, so there is a third margin, fortunately for everyone, is that, of course, jobs can reorganize and change. And let me, if I may, give just one example, because we are in the bank. There is a famous example that is used, it's actually the banking sector, where in the 80s, ATM started to be adopted more broadly. And so bank tellers were in trouble, right? Because you need less people to actually manipulate the money. And if you look at the diffusion of ATM in the economy, and at the same time you look at employment in the banking sector, they actually increase exactly at the same rate, which is very surprising because you would expect that they go in opposite direction. But the thing is that jobs in banks completely evolved. So there is less need for people, manipulating physical money, but there are more need for additional services and interaction with customers. And so fortunately for everyone, including accountants, people adapt and jobs can be preserved even though they are very much at risk and are going to be impacted by AI.
Well, for accounting friends, if that is any consolation, I think financial analysis is not particularly safe either. Okay, so let's look at the consequences of this in terms of growth and productivity gains. Then, the first thing to say here is that experts strongly disagree, actually, in terms of their expectations, and the range of prediction is really quite wide. I'll give you a few examples here from the literature. So Goldman Sachs predicted in 2023 that AI would lead to a 7% increase in global GDP and a 1.5% annual increase in US productivity growth over the next 10 years. Then even better, we have McKinsey in 2023 who suggested that generative AI alone, just generative AI, could offer a boost as large as $17.1 to $25.6 trillion to the global economy on top of previous estimates of economic growth from increased work automation, and that it could produce between 1.5 and 3.4% rise in average annual GDP growth in advanced economies in the coming decade. And then on the other side of the spectrum, we have someone like Darren Acemoglu of the MIT, who proposes a much more cautious analysis in 2024 with like a 1.1% total impact on GDP over the next 10 years. And like he says, a non-trivial but modest productivity gain of about 0.7% over 10 years. So really, why is there such variance in the prediction? I guess you gave us already elements of answers, but why so much variance, and what can we really expect from AI, Antonin, in that respect?
So I think the reason why there's so much variance is that there's many channels through which AI can impact growth, it's the economic size of the economy. The most natural one to think of, and this is the one that Darren Acemoglu is considering, is simply this, what you call the automation channel. Is that there will be jobs that are going to be replaced by AI. AI is better at coding than us. Okay, there's this number of jobs as developers, and they're going to probably disappear and be replaced by AI. Maybe the job is not going to disappear, but a large chunk of the task is going to disappear, so you expect those people to become much more productive. Productivity is simply the measure of what you create as a value divided by how many people are working, how many hours they work to produce this value. So if there's less people working, or if an hour is becoming much more efficient, you would expect productivity to increase, and then you expect to have more economic growth. But because of this difficulty to automate a lot of tasks, because of the slow diffusion of those AI, and also because a lot of people do not realize the gains that they will have in adopting those AI, the estimation that's been made in this paper, and that you can see here replicated with more optimistic assumptions in Europe, they pretty much assume here that the growth rate will increase by 3% over 10 years. So that's about 3-4 times larger than what's been estimated by Darren Acemoglu, but still not a lot. Okay, that's 0.3% a year. So to give you some order of magnitude, growth is about 1%, let's say. So that's like a 30% increase in growth, which is not a lot. And if we go back to the second industrial revolution, the effect of electricity led to growth rate of 5, 6, 7%. Okay, so like much larger than that. So that's the reason, right? The reason is the slow diffusion, and this is a margin in which we can actually, we can improve, right? Because we need to convince people and train people to understand exactly that they shouldn't fear AI, but they should actually embrace it and see where they could find gain in adopting AI and use AI in their process, and managers not to block the use of AI, but also to enable their workers to work with AI. And I think part of the anxiety is also based on this idea that we are facing a competition between human and machines, and that we need to slow down as much as possible the diffusion of AI, because AI is going to make us obsolete. And that's why I think it's important to remind people that these are not new debates. In the history of technology, human labor never disappeared. And those debates existed at many points in time. And every time we are at the beginning of the development of a new technology, there is always this anxiety of being replaced by the technology. But the problem is that this has negative impact, because in fact, and that has been shown with robotization and in the industry, the impact of robot, pretty much like in the banking sector, the impact of robot on labor and on wage is actually positive. And we can show it statistically. And the reason is that robots increase the productivity and the efficiency of firms. Firms could then develop new products, new services, capture new markets, and they will grow. And in order to capture this new demand, they will have to hire people and to increase wage. So if we don't block AI, if we adopt it in a smart way, we will generate those productivity gains. And at the end of the day, this could have aggregate net positive effect for employment. But just to be clear, it doesn't mean that no one is going to lose their job. Okay, there has always been macroeconomic implication, but the macro, the global effect would be still probably positive even for employment.
I think you said something that was very interesting earlier about the cost of implementation of the technology as well. And certainly in the case of AI, given the cost of NVIDIA GPU today, we are reaching, quite quickly a barrier above which it doesn't make sense to implement. Do you think there's a chance that we are actually largely overestimating productivity gains because of that at the moment, at least in the economic literature?
No, for sure, there is this physical limitation, let's say, that right now AI are using a lot of natural resources to train those models. So we typically are not very good to account for that when we measure productivity. So we think those will have long-run effect. Of course, they will slow down the adoption and the production of those AI. But I think the cost that those studies have in mind are, much standard. So there is the actual implementation cost. If you need to install a smart camera everywhere in your offices just to monitor workers to see exactly what they do and to replace them, that's very costly. And if it costs you $2 million a year, then the question is my wage bill I'm going to save in automating those tasks worth $2 million a year? It's not so clear. And in the paper that you mentioned by Acemoglu, it actually estimates that in many cases, it's going to be much more efficient to continue with workers. So that's why you get to very pessimistic results. The other cost is, of course, the fact that AI continues to make mistakes. They are getting better and better, but they will always make mistakes. They also make mistakes that, as humans, we don't tolerate very much, because those are not human mistakes. Those are not mistakes we are used to see. And then, the cost for a company to fully automate, including with those smart agents that you mentioned, could be huge because of those error rate that it could be small, but it could be dramatic in terms of impact. That's the cost that I think people have in mind. But for sure, the environmental cost is also something we should consider.
And on the other hand, there's probably a risk as well, Hadrien, but only focusing, I would say, on those existing occupations and tasks, and not maybe thinking about what the technology can bring that is completely new and that maybe is going to boost the economy in a way that perhaps is difficult to predict today, but nonetheless will be meaningful. And if we take the internet, for instance, it brought us things like social media, which today is employing, dozens of millions of people around the world. So how do you actually think about that when including this in productivity reasoning?
Yeah, you're right. I'm not sure that Netflix increased productivity, to be honest with you. Now, I would say the same thing as Antonin, but with different words. Just if we want to go back to productivity, as you said, Antonin, there are two ways to increase productivity. First, of course, increase growth and value added, as you mentioned, and its possibility. And on the other hand, you can cut jobs while producing the same thing. And I think here this is very important because this AI will have some different effects, and these two simultaneous effects are very, very hard to measure. On the one hand, you have substitution effects. You mentioned it, Mika mentioned it, Eric, you mentioned it also. Jobs, administrative with repetitive tasks, will disappear. That's a fact, no doubt on it. On the other hand, and you mentioned it also, there will be some enhancement effects. And I think we have to insist on it. That's jobs that involve a minority of repetitive tasks. You also said it, but I definitely want to insist on it. And these jobs will see their productivity increase, and I think that's definitely key. So you say that maybe accountants can have a future, maybe financial or economists can also have a future. Let's hope that with AI we will give some time to produce better analysis. But as you mentioned, estimates vary widely, ranging, for example, from 5 to 30% for potential jobs threatened, from 10 to 30% for potentially enhanced jobs. So uncertainty is very huge, and at this stage, it's very difficult to say if the enhancement effect or if the substitution effect will win. But maybe in the short term, it's important you mentioned it, short term and medium term. In the short term, that's likely that job destruction maybe will maybe be more important than job creations. Over the medium run, I think it's totally different thing, and you mentioned micro and macro, and I think over the medium run, of course, we'll have some job creation, as you mentioned, for the banking sectors with ATM, but still we need to see it in the future. Regarding productivity and how can we increase growth and value added, you mentioned, Eric, of course, Acemoglu with this 0.7 per year over the next decade. Antonin, that's more around 0.3 per year. Frankly, 0.3 as a macroeconomist, that's something that still remains significant. Yeah, that's non-trivial. For Euro area, for example, our GDP growth forecast is around 1%. So that just means that around 1/3 of this can boost GDP growth. And we didn't speak yet about the Draghi's report, but the Draghi's report clearly said that the productivity gap between the US and Europe is mainly due to information technology, and especially productivity in these sectors. So of course, this is maybe only 0.3 or something like that, but we definitely have to embrace it just to not to lag other countries such as the US.
And I think we should remember as well that, like we were saying earlier today, that there are also some negative impacts of those new tasks or occupation or things that you can do with AI that can have a non-trivial impact on GDP, and I'm thinking of the cost of cyber hacking, for example, and deepfakes and things like that. I was reading some numbers yesterday. People are thinking about $10 trillion a year due to cybercrime, and clearly AI can become an accelerator of this. So it's not just positive trend, also like compensation with negative elements here. Antonin, I would like to perhaps go back to labor and talk about inequality. We're all wondering how this is going to play out. Is there actually a risk of generating greater inequality between low-skilled and high-skilled jobs with the use of AI? Or do you think the whole thing is actually a big leveler for workers in general?
So I think for AI, this is where maybe AI is a very different technology than everything we saw in the past. That's because the direct adoption cost of AI for a worker is quite low, especially for generative AI, because this is basically what we are talking about. One of the main stylus facts that you see in history is that there is what we call a skill bias technical change, which means that whenever there's a new technology, people that have the skill to use it, they benefit a lot in terms of wage and income on the short run. And then education catch up, and at some point, the wage of those people that have the specific skill that is acquires ultimately goes down. It's what we saw, for example, with machine learning, with blockchain, and with a lot of new technologies. There is a huge demand suddenly arriving, and the few people that master this technology, they get a lot. And that increases inequality, paradoxically, on the short run at least. For AI, it's a bit different because we realize that, and if you could go back a few slides, you will see that the jobs that are more at risk of AI, they're actually mostly executive jobs. So those are French labels. But if you look at the second to the top line, those are production workers, ouvriers, and you can see that the distribution of the risk of being impacted by AI is actually quite low for those production workers, contrary to the executive, which is the fourth line from the top, where they are much more impacted, likely to be impacted by AI. So you may think that with AI, it's a bit different because, in fact, first, everyone can use AI quite easily, at least for basic tasks. And second, the people that are more at risk of being competed and having that, at risk of having to compete with AI and to lose their job are actually mostly executives. So that's why we think that AI could be actually some kind of leveler, as you said, because it will enable the less skilled worker in terms of education to adopt it quite easily, but also not to face this competition. And actually, those very early estimates of the impact of AI on your own productivity, on your own efficiency, showed two paradoxical results. The first is that people that are less educated, they would benefit a lot from using those AI. But also that they are more reluctant to use it, and they tend to not to know or less well how to use those AI very efficiently. That means that there is some room for training and for helping those workers to take AI that will increase their productivity and ultimately make them more valuable for the firm, increase the wage, and that could lead to a reduction of inequality, which is quite paradoxical because, again, all technologies led to an increase in inequality, in fact.
So do you think perhaps it's one of the arguments in the Acemoglu paper, then what we'll see is a widening of the gap between capital and labor income contribution to GDP? Is that something that seems credible?
Well, that's what you would expect with any technology that will replace worker with capital, is that the people that own the capital, they are going to mostly benefit from this change. So again, it comes back to the question of how many jobs are going to be actually replaced by capital, and then to the question of would they be productivity gains, because those productivity gains are actually what will increase the size of the economy, and then there will be room to redistribute part of this size. Actually, coming back to your point on the 0.3% estimate of the impact of AI, indeed, it's a lot compared to what we used to see. But that's not big compared to what we would need to face those challenges that we have, and including reducing inequality. If we generate only 0.3% growth, that's what's 30 billion euros a year of additional resources generated in Europe. As a whole, that's nothing compared to what we would need to face all the challenges, including, again, reducing inequality and helping the poorest workers and people to increase their wealth. So I think this is where the key question is what will be the productivity gains? Everything else will be a byproduct of this question.
So Micaella, if we focus a bit on the workplace again, how do we prepare for these changes, and how do we reduce these potential inequalities between workers?
I think human resources will be essential in this because first they will have to identify the job most likely threatened by AI. As Antonin and Hadrien said, there are jobs that will disappear. So the company has to be prepared on that. And they have also to identify the jobs that are likely to evolve with the technology, then anticipate the change to be put in place in terms of organization, recruitment, because there can be recruitment, of course, and skill development and budgeting. The important thing also is to develop tailored training pathways, in particularly to master AI tools. This training program, to be optimal, need to be developed with business line IT and sometimes external training organizations. This training need to be evaluated and to be updated with the latest technological advances. To succeed also, HR need to give proper recognition in terms of bonuses, promotion, to the employees wanting to upskill, to the ones that have already integrated AI in their day-to-day work, and to the ones that have participated in AI tool pilot project.
Can I say that I'm using AI on a daily basis?
Yeah,
Is
great.
All right. Please,
It's good.
Jean-François, remember, I'm using AI on a daily basis. I want a bigger bonus next year.
Great. And also we say that some employees, they fear to be obsolete. So sometimes they are reluctant to use AI. So HR need to reassure and to motivate employees to use this tool and to use it properly. So internal communication can be a good tool. Also, we have survey and opinion polls that can be used to gather feedback and to ask employees how they feel, what are their fears, what are their concerns, what are their opinions. So it's very important. And in all that, HR need to work, of course, with management, employees, business line is very important, with IT and social partners, of course.
So do you think there's a need for policy response and regulation in terms of preparing for these very big changes in the workplace, and how can this actually be balanced against the need for, to foster innovation and to maybe close the gap with our American friends? Happy Liberation Day, by the way.
So Eric, I think that the legal and ethical framework is a need to establish the trust, need to adopt AI in the workplace, but also in every place of society. AI models are based on mass collect of data, sometimes personal data. So companies need to be transparent about how they use this data and to comply with current regulation, like we have in Europe with the General Data Protection Regulations. Antonin talked about the limit of AI because AI can make mistakes. There is also the important question of hallucination and the biases. Company needs to be transparent about the models they used, try to explain how they work, and to correct any bias identified. So in Europe, we have the AI Act that classifies AI system according to the risk with prohibited use to protect citizens. And also they require transparency in the model use, especially for the so-called high-risk AI system. So this regulation will act as a necessary safeguard. But as you said, there is this conflict between regulation and innovation. So, of course, the will to regulate AI or any technology is praiseworthy, but it faces economic and competitive realities. Compliance with regulations implies significant costs that may be very difficult to bear, especially for small companies that may choose to renounce to AI, with, of course, certain consequences on their competitiveness. And you say that we are lagging behind the US and China. So, of course, the strict regulation and in Europe, which is very strict compared to the one in the US or in China, can exacerbate the lags of Europe in AI. So there are more and more calls for the European Union to adopt a more flexible regulation, more in line with economic realities, and of course with the rapid pace of technological advances. Just to add a few things, so European Union is aware of all these critics, so they know that they also have to invest. So, for instance, they announced during the last summit on AI in Paris in February, they announced 200 billion euro plans that will be invested in AI infrastructure to stimulate innovation and strengthen European Union competitiveness. And also, we will have the regulatory sandboxes starting in August 2026 that will be more flexible regulatory environment where firms can test their AI system. And the aim is to promote innovation and at the same time promote collaboration between the entrepreneur and the regulators.
So I have a question for all three of you, actually. Will there be a need at some point for something a bit more extreme to, revisit completely, the future of work? Do we need something like basic universal income, which is something, by the way, which has been advocated by people like Sam Altman, slightly important people in the world of AI. Antonin, what do you think? Is this complete fantasy, or is there any form of formalism that justifies this approach?
Well, I guess it's justified in a world where AI will take over most of the job and create most of the value and create so much values that there are, no way that should be redistributed only to the few people that will own the capital. That's the general argument in favor of those universal basic income, is that there is value creation, but there is no more need for workers. So 99% of the population is not going to receive anything. I think we're quite far away from that. I also think Sam Altman has some meat in the game, right? It's not so clear how serious he is when he talks about UBI. But right now, I don't see why. I mean, it's beyond the general question of whether we should promote this kind of general income for the general population. But I don't see why AI will change that, unless we get to this world, which I don't think is very likely in the near future anyway.
Yes. Before talking about universal wage, I think, as Antonin said, we just have to see first the productivity gains before talking about this universal wage. So first, let's see the productivity gains, and only in that case, of course, we can choose to use part of these gains either for more time, or only for gains, or for some kind of insurance, such as something like this basic wage. We can, for example, rather think or prefer just spending more time at the coffee break. That's also another option than having only productivity gains. No, just to finish on it. Some jobs will be cut, and I think, and Micaella mentioned this, and I just want to insist on it, that government should boost permanent training, and also companies improve ability of workers to switch jobs, as of course there will be some job destruction, and it will be very important for the government, but also for the companies to help the people just to find new jobs. So one step after another.
Mika, wouldn't it be nice to be in a chaise longue drinking cocktails whilst a little robot does a writing job for us, and Daisy?
It sounds great, but I don't think it will happen, and I think it won't be impossible. I don't think we'll have I think the basic universal income is too low, maybe. So just like Antonin, to be more serious, just like Antonin and Hadrien, I don't think that I don't believe in a future without work where we will need this basic universal income, but beyond my personal belief, I think that many questions arise when we talk about the concept of basic universal income. So, how can you live decently without working? Is it possible? What is the amount of this basic universal income? Could it eventually exacerbate inequalities? Whereas the goal is supposed to solve inequalities, to redistribute, as I understand, the gains of AI, the productivity gain of AI with other people. And there is also a more philosophical question. Will it create a form of dependence on society? And then what about human dignity?
Absolutely. What about dignity? Yeah. Okay, 5 minutes left. I think we're going to switch to questions from the audience, and I've got one here about actually another form of inequality that we have not addressed yet between countries. It's clear today that AI really is in the hands of the richest nations? Will this create more pressure on emerging economies? Or again, it's a similar thing. Do you think that countries like India or the Philippines will see this as a big leveler versus the Western guys?
I think it's a super important question, and a question it will be hard to answer in less than 5 minutes. But to be quite brief, I think the good thing with AI is that there is a huge open movement that produces models that can be used for free. At least they can be downloaded and owned for free, used locally. There is not so much gatekeeping as with previous technologies, which we know created a lot of inequality too, because if you think of digital technologies, they were owned by a few firms. All the algorithm of the program that we use, all the softwares, they are used by a bunch of firms that have huge rents and are part of the reason why there is also paradoxically a slow diffusion of this technology. With AI, it's not clear that will be the case because of all those free models. But then the question is, there is the question of infrastructure. But in a sense, it's easier to solve this question because it's only a matter of public spending in existing infrastructure that you need to develop. And you can catch up very quickly in terms of the technological gap. So in that sense, it could be, for the first time, one technology that will not exacerbate productivity gaps across country. But then you need to take the good policies to develop those infrastructure, which is, again, another question.
I think there's the case for saying that outsourcing call centers to the Philippines or other countries which are actually relying quite extensively on these type of activities at the moment. I think it's something like 5 or 6% of their output. That could be actually a threat for them, right?
Right.
If we just need to run the chatbot from here.
Yeah, definitely. It was something in your chat, Antonin, that this kind of jobs are definitely threatened by AI. And I think in the literature there is some kind of consensus just to say that the emerging market has a more at risk on it, as this technology will be adopted first by advanced economies. However, and you mentioned it, that's also an opportunity due to the open source model of this AI, and I think it could be a formidable tool, maybe especially for education, for some emerging market countries to make some access much more greater than today.
So we had another question here, talking about, you said benefits from AI productivity gains will be redistributed not only to shareholders. How do we distribute those benefits to the many people who won't have jobs?
Well, it's actually easier to answer this question if you have gains, right? Like it's the question, whenever you have an additional, revenue to tax, then it's up to the state to decide which one to distribute this to. If you don't have anything to tax, anything additional to tax, then the question is, who are you going to take money from to redistribute to other people? And this is where you get those political frictions and conflicts. So it's actually much easier to do it in a context where technology is rapidly expanding, paradoxically. Even though you may think that this will increase the revenue of OpenAI and Google and so on and so forth. In fact, there will be. You have to think the economy should be seen as something that increases in size. Okay? It's not something that doesn't move. So whenever you increase the size of the economy, you can take whatever has been created and decide who to give it to.
Okay, now we have something from a very unhappy accountant, so we're going to. Now, if all companies have the same AI tools at some point, what would differentiate us from our competitors? The human factor, the relationship. Mika, maybe that's one for you here. What would differentiate if we're all using the same tool?
Could you repeat, please?
If all companies have the same AI tools at some point, what would differentiate us from our competitors? The human factor, the relationship?
I think the relationship will be very important, because we need that as human beings,
So good news for human labor.
Yeah.
Hope so.
The ability to invite super experts such as Antonin at some webinars, for example.
All right, I think that's it. We have no more questions from the audience. Antonin, thank you very much for your time on this panel. It was greatly appreciated. Thank you, Hadrien. Thank you, Micaella. And we'll see you next time in the studio. Thank you.